The biggest tax overhaul since 2017. Donald Trump just signed into law the One Big Beautiful Bill Act on July 4th, 2025, and it is going to change how much money taxpayers get to keep in their pockets every single year. This bill is enormous. It covers things like nutrition, defense, housing, energy, and so much more. But today, we're going to be talking about taxes and what new opportunities you guys have as taxpayers, what things have been made permanent, and all the major changes. So stick with me because I'm covering how it impacts W-2 employees, business owners, and investors. Let's go. So let's talk about the permanent wage step. Starting in 2026, the pre-TCJA rates were scheduled to kick back in, which means our income tax brackets are going to go up another 2 to 4%. So on $100,000 income, if we were in the 22% tax bracket, our tax bill would be $22,000. Well, if it would have went back to 25% on $100,000 of income, we would have to pay $25,000 in taxes. That is a $3,000 increase just because we changed tax years. Whoa. So super grateful that our tax rates will be staying the same, lower rates forever, or at least until the new administration. In addition to the lower permanent tax rates, the doubled standard deductions are also here to stay. So if it wasn't for this bill passing, our standard deduction would have reverted back to, I believe, like $6,000 or $6,500 for a single taxpayer and about $12,000, $12,500 for married couples, something like that. Don't quote me. So obviously you can see that you'd much rather have the doubled standard deduction because that is something automatic the IRS just gives taxpayers to lower their income before their taxable income is figured. If you earn $150,000 or less as a single taxpayer or $300,000 and less as a married couple filing joint, listen up to the big three: no tax on tips or overtime, the senior tax deduction, and the increased SALT deduction. So no tax on tips up to $25,000, and that's cash or credit tips. But
were you really reporting your cash tips?
Anyways, there's also no tax on overtime pay up to $12,500, and the deduction is specific to the half-time pay. So for example, if your regular hourly salary is $20 per hour and your overtime pay is $30 per hour, the deductible portion is the $10 difference between your regular and overtime hourly pay. And then there's the new senior tax deduction for $6,000 per eligible taxpayer. So if you're a married couple, then your deduction would be up to $12,000. The income threshold is $75,000 for single taxpayers and $150,000 for married taxpayers. And this is in addition to the already enhanced senior standard deduction. I know Big Daddy Don promised no tax on Social Security, but this is as close as he can get. Drum roll for the newest change that is probably going to help more taxpayers than all of the rest of them because the income phase-out threshold is much higher than all the rest. So if you earn more than $500,000, whether you're single or married, you can now write off up to $40,000 of your state and local income taxes and your property taxes. This is up from $10,000 that we were previously capped at after the Tax Cuts and Jobs Act. So if you live in one of these high income tax states like California or New York like me, you might want to do some planning to see if you can reduce your withholding now that you have an additional $30,000 deduction available to you. And again, you want to plan if your income does exceed $500,000 because the tax deduction does start to phase down, but you'll still get the $10,000 minimum. So a few honorable mentions. If you plan on buying a vehicle between 2025 and 2028, and you make sure the final assembly was here in America, you can qualify to write off up to $10,000 of the auto loan interest if your income is under $100,000 as a single filer or $200,000 as a married couple. So I don't know how many people are talking about this, but I do have a few clients where adoption is a part of their story. And so there is a refundable $5,000 credit for some of your adoption costs. So if you are pre or post adoption, please reach out to my firm so we can discuss the tax benefits that apply to you and your family. So the last of our honorable mentions, the mortgage insurance premiums deduction is back. You probably didn't realize, but you lost this deduction back in 2022 until 2025. So the deduction is coming back in 2026. So make sure you pay attention to your 1098 mortgage interest statements, box 5. If you're a parent like me, listen up because I got a couple things to tell you. The child tax credit has now been increased by $200 to $2,200 per child and will continue to increase for inflation every single year. The refundable portion has also been made permanent as well. So get out there and make some babies. So the almighty Trump accounts for those precious babies born between 2005 and 2008. Yep, the U.S. government is going to give your kiddos a $1,000 deposit into their newly opened IRA. So friends and family can contribute up to $5,000 a year to the account, and actually super cool, employers can contribute up to $25,000 a year on behalf of the parent who's their employee to these accounts, and it won't be taxable to you in your W-2. So America is really trying to start kids out with investments from birth, which is super important. Although I do think there should be like a test or some sort of educational piece before we just give everybody $1,000, because some people might withdraw that money. But anyways, we're not here for my opinion. We're here to learn about the law. And because this is an IRA, once the beneficiary, the child, turns 18 years old, it does convert over to a traditional, and they have to let the money sit until 59 and a half, unless they withdraw it for a qualified reason like education or the first time home buying. So I know I've been talking about all the new exciting things that are coming, but unfortunately, there's a couple things that are going bye-bye. All things green are going bye-bye. Trump said he doesn't want it. If it's not made in America, if it ain't muscle, it's out. So if you wanted to purchase an electric vehicle and get that $7,500 credit before it phases out, you must bust a move before September 30th of 2020. If you were going to put solar or any other alternative clean energy improvements to your home, that actually is still going to be available through December 31st. But after that, all those credits are gone. And now for my business owners and investors, 100% bonus depreciation is back on the table. You should be fired up because we were set to only get 40% this year, 20% next year, and it was going to be completely gone in 2027. America is really trying to promote our manufacturing and stimulate our own economy right here at home. So again, now is the time to do planning because you can go out and get a new piece of equipment, machinery, a vehicle, and 100% depreciate it this year and take a loss on your tax return. You can't even do that with Section 179. So this is super, super powerful, and I'm very grateful that it's back. And speaking of Section 179, the amount of assets that you can write off actually increased with this act to $2.5 million. But don't go over $4 million because then your deduction will start to phase out. Also, research and development. If you're bringing a new product or service to the marketplace and you need to do surveys or testing, those expenses can now be expensed immediately instead of you having to capitalize them over many, many years. The qualified opportunity zone has also been enhanced. Super, super cool because now if you hold it for 10 years, you can actually not pay any tax on the gain. So before, if you held capital gain, you sold something else, you got a capital gain, you put it into a qualified opportunity zone via a business or real estate or into qualified opportunity zone fund, and you left those capital gains in there for 5 years, your investment basis would get a step up of 10%, and then at 7 years, I think it was 5%. Now, if you leave it in for 10 years, your step up on your investment will actually be fair market value when you sell it, so you won't be paying any tax. So if you have a considerable capital gain just lying around, or one that's coming up, you definitely want to consider the strategy. Again, this is going to require some planning. And I saved one of the best for last. The qualified business income deduction, the 20% income haircut the IRS automatically gives sole proprietors, single member LLCs, partnerships, and S corporation shareholders. Why? Because you're stimulating the economy. You're trying to create jobs. You're trying to create housing and all these different programs that we need to be a really strong country. So the IRS rewards business owners. But you know what? These deductions are available to the small business owner just starting out and really, really big companies. So if you want to take advantage of all of these business owner and investor deductions that I've been talking about, then let's talk about how you can start a business for yourself. If you think one or more of these new deductions are applicable to your situation, then again, you want to make sure you do some tax planning before the end of the year to see if you need to adjust your withholding or estimated payments. Give Luxury Tax Prep a call at 661-240-9244 to schedule your consultation now. Thanks so much for choosing Luxury Tax Prep as the trusted source to get your One Big Beautiful Act updates.